A Bitcoin is currently trading around $90,000, while back in 2009, one Bitcoin was worth only about 70 cents. It's safe to say that this is one of the fastest growing assets in history. But what exactly is Bitcoin? Is it legal? Why does something you can't physically hold have such a high value? And how can someone actually own Bitcoin? All of these questions will be answered in this video. Bitcoin first appeared in 2009, created by a person, or possibly a group, using the name Satoshi Nakamoto. You don't really need to worry about who that is, because to this day, no one knows for sure who Satoshi actually is. What truly matters is the idea behind Bitcoin, to create a system for online transactions without relying on banks or financial intermediaries, completely different from how traditional money works. However, data on the internet can be easily copied. So in order for this system to be secure, blockchain technology was created. Put simply, blockchain is like a digital ledger where every transaction is recorded publicly and cannot be altered or erased. What makes blockchain special is that it doesn't belong to any individual or organization, not even its creator. Because of that, it's highly transparent and extremely difficult to manipulate or cheat. Once blockchain was in place and Bitcoin existed, the system could begin operating. In the early days, one Bitcoin was worth about 7 cents and 61 hundredths, roughly equal to the cost of electricity required for a computer to create it. This process is called Bitcoin mining, because the total supply of Bitcoin is limited, much like gold in the ground. You can mine it, but it's not infinite. If Bitcoin could be created endlessly, its creator could simply print more for personal gain, and its value would drop due to inflation. That's why the total supply of Bitcoin is capped at 21 million coins. According to current estimates, about 90% of all Bitcoin has already been mined, but the remaining portion will take a very long time to extract. The first reason is that mining costs keep increasing, especially electricity costs. The second reason has to do with ownership. Many Bitcoin wallets purchased in the early days are now inaccessible, often because their owners lost their private keys or forgot their passwords. According to a study by the New York Times, up to 20% of all Bitcoin may be permanently lost, which further reduces the actual circulating supply. There's also another major event called halving. Every time the network mines 210,000 blocks, the Bitcoin reward is cut in half. This happens roughly once every 4 years, similar to the World Cup. Historically, after each halving, supply decreases while demand remains the same, or increases, which often leads to a significant rise in Bitcoin's price. Now, going back to the concept of cryptocurrency. As the name suggests, it's a form of money that exists and operates entirely in the digital world. Countries like the United States, Germany, and Japan tend to be relatively open to cryptocurrencies because of their high liquidity and convenience. The mining and use of these currencies must always follow blockchain rules, especially the rule of limited supply to prevent inflation. As of today, there are more than 20,000 cryptocurrencies in existence, including Bitcoin, BTC, Ethereum, ETH, and many others known collectively as altcoins, such as BNB, XRP, and SOL. In the crypto community, there's a common saying: Bitcoin is the king, Ethereum is the queen, and everything else is just pawns. The reason is simple. If Bitcoin collapses, the entire market is likely to follow. Ethereum carries more risk than Bitcoin because it has a company and development team behind it, while Bitcoin is completely decentralized. ETH is now considered too big to fail, but risks still exist. Other altcoins are generally much riskier and are usually bought aggressively only during uptrend cycles. An uptrend is a period where prices continue to rise, forming higher highs and higher lows on the chart. Many altcoin projects are created with impressive technological narratives, but most of them disappear over time. Personally, I invested in altcoins back in 2021 and still haven't fully recovered, while Bitcoin and Ethereum have at least delivered modest gains. Occasionally, some altcoins experience sudden price spikes, often due to large investors or whales pushing prices up. But in a market with hundreds of thousands of tokens, the odds of picking the right one are quite low. That's why a common rule is that Bitcoin and Ethereum often make up more than 60% of a portfolio. As for detailed investment strategies, we'll talk about that in another video. Finally, let's address a question many people ask. Is trading cryptocurrency illegal in the United States? The short answer is no. In the US, Bitcoin is recognized as property, not legal tender like the US dollar. This means you're not prohibited from owning, buying, selling, or investing in Bitcoin. However, Bitcoin is not considered official currency for mandatory payments. So when you use Bitcoin to buy goods, services, or even a house, the transaction is legally treated as an exchange of assets, not cash payment. In the United States, the most important issue when dealing with Bitcoin is taxes. If you buy Bitcoin and sell it at a profit, that gain may be subject to capital gains tax, similar to stocks or real estate. Failing to report taxes properly is what can cause legal trouble, not the act of owning or trading Bitcoin itself. To sum it up, cryptocurrency is a type of asset created by technology, operating without banks or governments acting as intermediaries. The system is transparent, difficult to manipulate, and its value exists because people believe in it, much like how we believe in paper money or gold. This video was compiled and researched from multiple sources. If there are any inaccuracies, we welcome your feedback so the content can continue to improve. Thank you for watching. If you found this video helpful and easy to understand, don't forget to subscribe to the JohnAn channel so you won't miss future videos. See you in the next one.